Hey guys, welcome to the Silver Report. Here we are, it's Tuesday, March 14th, 2017, and let's get right into some of the economic factors that will be playing a part into the price of precious metals. Now, we do have a very important event coming up. And now I just want to discuss our 100-year debt explosion that we've been undertaking in the United States. It's created a time bomb. It's just waiting to explode. It's not really if, but when. Very little is required to set this thing off. As the biggest economy in the world, the U.S., it obviously has the largest debt. It is a total of $65 trillion. To this, we need to add unfunded liabilities around $200 trillion, derivatives of circa $500 trillion. We're looking at a total U.S. risk of $750 billion. And so what we're seeing, let's assume that there will not be an early agreement to increase the debt ceiling. That would trigger major falls of the dollar and bond markets, and probably also the overvalued stock market we're seeing right now, which is overvalued at 150%. The repercussions would be higher rates, higher import prices, bigger budget and trade deficits, and more money printing, of course. Can't forget the quantitative easing. Inflation will increase rapidly, and eventually, as the dollar falls, it will lead to hyperinflation. More money printing, again, their favorite, yet higher rates, and an unstoppable, vicious cycle. The derivatives market, which is extremely sensitive to higher interest rates, would also come under pressure, leading to more money creation, more money printing by the Fed. There are major forces in the U.S. who want the total paralysis of Trump's ability to lead the U.S., to be president, to conduct any of his actions. This will make it virtually impossible for the current administration to govern effectively. As the financial crisis accelerates, there will be even more pressure to oust and impeach Trump. There'll be violence and riots in the streets, as well as empty grocery stores. This situation will be disastrous for the U.S., as well as for the world economy. The whole process could drag out and last until the fall, 2017, and it could start, honestly, with the 15th of March, the Ides of March. In October 2015, the U.S. debt ceiling was suspended until March 15th, 2017. The debt ceiling is, of course, it's a falsehood. It's been raised 95 times since 1940. And so every administration has totally ignored the debt ceiling. They just raised it to accommodate their irresponsible budget, and all that, they want to buy votes and line the pockets of the banking sector. And so what we are anticipating as a result of this meeting, number one, the problem is firstly to reach an agreement, which will be a mammoth task, will be a humongous task just to find an agreement about this debt ceiling. We can't even get people in the cabinet approved. Record lengths of time it takes to approve some of Trump's cabinet choices. And on top of that, we have resistance groups forming to resist Donald Trump and his decisions, his policies that the people in the United States have voted for. And so, first we have to come to an agreement on the Hill about the debt. Secondly, the increase in the limit required is so big that there'll be massive reluctance to accept the magnitude of it. Since 1981, the U.S. debt has doubled every 8 years. This means by 2025, if the projections stay the course, the U.S. debt will be around $40 trillion at a minimum. But with the problem in the U.S. economy, the level is likely to be considerably higher. So a likely increase for the current year would be $2 trillion at least to be able to even give them room to breathe. You see, they're trapped inside of a building with the water rising to the top, just trying to breathe near the top of this ceiling. And just raising it a small amount is not going to be enough, just from the sheer volume of debt that is amassed. It's unlikely that such a high increase would be approved, which means that the falsehood would continue. We're now seeing that it's almost a certainty for the Fed to go and to increase rates also at their March 15th meeting. It's interesting how they all happen to fall right on the same day. And so we also see that inflation is back. Inflation is back, so we have these debt pressures. Inflation is back. It went from 0% to 2.5%, which is a 5-year high in just the last 2 years alone. As the dollar falls, velocity of money increases, and we're going to see this inflation increase rapidly. It could easily reach 10% in the next couple of years. And all this money that's been sitting on the sidelines, that has been printed through these 3 cycles of quantitative easing, will begin to move its way into circulation and destroy. Oh, the dollar's already been destroyed. It's already done. The dollar's already been so devalued, it's just we've been prevented from seeing it, and we will begin to see it as your dollars become worth nothing. This is what happened in the 70s. The 10-year treasury went from 7% to 16% in 4 years. In the UK, the inflation rate was in the teens in the 1972, 1980. What we are watching is the potential for immediate and huge gains within the silver and gold market. We have seen artificially suppressed numbers. What took place during the beginning of March was obviously an attempt to suppress silver from its heating rise, because nobody would really, if they see a market on the rise so quickly, so fastly, so much energy and enthusiasm, so much demand pouring into the silver market, would go and want to sell off 2 billion contracts. It doesn't make sense financially. It's not a financially sound move besides price manipulation. What we're going to see as a result of this inflation is an uncontrol of the price. They're not going to be able to keep the price down anymore. The reason that we have seen this rise begin is the fact that inflation has kicked in from 0 to 2.5% in only 2 years. This is why the price of silver has been rising, and it's going to continue to rise as this problem gets worse. I just wanted to add, if you guys are new to the channel, we're giving away 4 ounces of silver. Go down and check out the 4-ounce giveaway video in the channel, and you can learn how. Thank you. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.